traders, my name is Grega Horat and welcome to a new video update. In today's video I will give you an update on the euro dollar, pound against the US dollar, dollar yen, gold and S&P 500. On euro dollar we are still bearish because of 5-wave decline from this year highs, actually from February to March lows. And since then we can see very slow, very choppy price action. This move cannot be counted impulsively, so if this is not an impulse, which means a structure that would lead to higher euro dollar, then it's probably corrective move, which means that we are looking to the downside on the euro dollar. I'm tracking here a flat in wave 2. Flat is a 3-3-5 pattern. This was a 3-wave move in wave A. This was also a flat in 3 waves in wave B, and now it appears that we are trading higher in wave C. Now in flat formations, wave C is not necessarily that wave C moves into a new extreme. Okay, so actually this reversal could already happen from current 61.8% retracement area. Okay, so actually the idea is that this move is still looking corrective and that we are waiting for a bearish reversal. Okay, bearish reversal would be confirmed here on the euro dollar if we get a larger 5-wave of decline. On the 4-hour chart, we were tracking this ending diagonal placed in wave C for a week now. As if you recall, we were looking for this reversal higher. We got this move into a new high. Also prices then nicely reversed from this upper trend line, resistance line of this pattern, and made a nice move lower. However, yesterday price action was a little bit tricky. As you can see, the market made a new low and now moved very close to the previous highs. But again, now the euro dollar is showing some weakness. So for now we are still in no man's land here, but I'm observing this bearish scenario as long as the market is trading below these highs here. Of course, for confirmation, I would love to see sharp reversal to the downside and maybe a daily close around this level, or maybe even around 180 support. This would be a nice indication that this rally was fake, most likely only a wave 2, and that we are headed lower. Okay, if this high would be taken out, then of course I will still be looking for wave C, because nothing would change on a daily chart. So in such case I would be tracking this alternative. For now that's still alternate count on this 4-hour chart. It's actually also a diagonal triangle in wave C, but it's expanding. Okay, but still we have here wave 1, wave 2, corrective structure, subdivisions in wave 3, 3-wave move to the downside in wave 4, and now we should also get 3-wave rally into wave 5, if that's the wave count that we should be tracking it. Okay, keep in mind that each leg in ending diagonals, expanding diagonals should be made by 3 legs. Okay, also here I can see that prices, this is the weekly chart, here are prices trading higher, are actually very close to the previous highs here, but notice that MACD is actually showing some lower levels here, much lower readings compared to previous highs. This is already early stages of a divergence, so I think that this is a nice indication that this uptrend is not strong, that this move is actually very poor, and it suggests a coming reversal in price. Okay, actually I like the fact that wave C is very slow, because that's the final leg within a larger 3-wave structure, and slow price action, low volume, decreasing momentum is usually an early signal for a coming reversal in trend, and then of course increase in volume and strong momentum will occur when the market will change a trend. Okay, and now let's take a look on cable. On cable I'm tracking something similar here. Firstly, let's take a look on the weekly chart. I'm looking lower here because of this broken trend line connected from 2008 lows, which suggests that this ABCDE triangle could be finished here in wave B. We can also count impulsive decline from this wave E high. So that's an impulsive decline, and since then the market is trading sideways, very choppy moves. Yes, we have seen a spike to a new low here, but this spike will not change this wave count. Actually, this is still a corrective movement, and I think that this was only a wave X, which means it was a part of this corrective wave 2. So this was a free wave move, which was a first zigzag, then a flat in this wave X, and now we are tracking a second zigzag. Okay, so the second zigzag should also then be made by 3 legs, and here I'm tracking this free wave movement on the 4-hour chart. We can see a nice clear impulse up in wave A, sharp wave B pullback, and now another 5 wave rally for wave C. Okay, so structure is 5-3-5 in zigzag, and if we have 5 waves up in wave C, then we know that reversal could follow soon. Okay, also notice that price is trading very close to this upper trend line of a corrective channel. We are also very close to equality level. As you know, in zigzags, wave C will typically be, or ideally be, very equal to wave A in pips. Okay, so if that's the correct count, then that's definitely the region from where reversal could follow. Okay, so be aware of impulsive sell-off. If we'll get impulsive sell-off back to the pre or fourth wave, then this will be a nice indication for further coming weakness on cable. Okay, also here on the weekly chart, I can see that price is testing this 50 period moving average on a weekly chart, from where I would love to see a reversal, like here. Also this MACD is approaching to zero line, so I'm also expecting a reversal here. This RSI is also around the 50, which is actually some kind of a pivot level between bullish and bearish price action, and I would love to see a reversal back below 50, while the price will also reverse down from those levels. Okay, this would be then a nice indication for bearish price action in progress. Now let's take a look also on dollar yen. On dollar yen monthly chart, we have updated this wave count. I think it was 2 weeks back, where we are tracking a huge flat correction in wave B. This was a free wave movement in wave A, 3 waves down with ending diagonal in wave C of wave B, and now this sharp reversal suggests that this is start of a new 5 wave cycle in wave C. Okay, so if that's the case, then we are now in a first leg of this 5 wave rally. Now on a daily chart, if I zoom this in, this was wave 1, wave 2, extended wave 3, then we are now here on daily chart trapped in a consolidation of a wave 4. Now, because this move from these highs cannot be counted impulsively, actually we have few overlaps here. I think that this is corrective move, so if this is a third leg from here, and if this third leg is corrective, then we know that this can be only a triangle. Okay, because in triangle wave C has a corrective subdivisions. Okay, while in zigzags, like I discussed on cable, wave C is made by 5 legs, and in this case you will also see that wave C will move into through wave A regions. Okay, this obviously did not happen here, so I'm tracking here a triangle, and ideally we are now already in wave D, moving higher. Wave D is still only fourth leg of this ABCDE triangle, so we need still wave E, so be aware of more sideways before this market will move to the upside. Here on the 4-hour chart, I can count here a nice 5 wave rally from recent swing lows, which I think it's wave C, and now we are then probably in wave B pullback, so I will be looking higher probably next week. into a third leg of recovery into wave D, back maybe even towards 100 level. Okay, but I think that this market will continue higher in the near term as long the market is trading above this critical short-term critical level. Okay, and now let's take a look on gold. On gold, as you know, we updated this wave count a few weeks ago. We mentioned that gold has turned bullish because the market has moved above this falling trend line of this impulse channel. Also, this rally was made in 5 waves, and then more importantly on the 4-hour chart we recognized a very slow, very choppy price action to the downside, which is characteristics of a counter-trend movement. Okay, so we label this as a corrective pullback within ongoing uptrend. Okay, also notice that this pullback found support very close to this trend line and we know that when a trend line is broken or resistance line is broken, then this resistance will ideally react as a support in a pullback. Sorry. So here's actually this corrective pullback that I'm talking about. I labeled it as a double zigzag in wave 2 or wave B, but that's not important. The important is that bias was higher at that time, because we know if the movement is corrective, then this movement must be fully retraced, and we called this new 5-wave rally as soon as we have spotted this breakout through this corrective channel on a daily close above this channel, and also because of 1 or 5-wave rally here in this blue wave 1. Okay, so we are now trading above these swing highs at new highs, and are looking actually even higher here. Why? Because even if we are in wave C, or even if we are on wave 3, we still need 5 subdivisions from these lows. Okay, so ideally this was first leg of a 5-wave movement, this was wave 2 pullback, and now we are moving higher in extended wave 3, so be aware of more upside after a wave 4 correction, most likely in the next week. Okay, if you recall, I also presented you my alternate count for gold, which suggests that we have more downside here to go. This was wave 1, wave 2, extended wave 3, and now we are in a wave 4 pullback, and we'll be looking to the downside. Of course, this wave count is also still possible, but again, here on the lower time frame within this wave 4, we are tracking a double zigzag, ABC X ABC. Again, if that's wave C, then we know that we need 5 waves from this point. Okay, and usually market will test termination point of one smaller degree when we are tracking 4 waves, and this comes here, and I can see here still that prices has room for further gains here. So even if you are tracking bearish or bullish wave counts, I think that gold will continue higher as long the market is trading above latest swing lows. Okay, okay, that's for gold. And now also let me mention that this wave count, alternate wave count, would be confirmed, and I would be ready to change it into primary count only if I see a 5-wave reversal back to the previous swing close, which was here. Okay, in such case, of course, I will not ignore the price action, I will go with the trend. Okay, that was gold, and now we will take a look on the final market today, the S&P 500. On the weekly chart, we are tracking very bullish wave count here, simply because the trend is bullish. Okay, we can see nice impulsive price action, nice extended wave 3 within wave 3 of larger degree of a wave 3. This is a very textbook example of 5-wave movement. So if we are here in the middle of a black wave 3, then we know that market will move even higher in months ahead. Okay, However, we are already here in wave 5, so any reversal, bearish reversal, should not surprise us, because larger correction could follow, because after every 5-wave movement, correction will follow. However, because of those Fibonacci projection levels, I'm looking for possible extended wave 5 here, which means we are now in a temporary pullback of incompleted wave 5, most likely. Okay, so for the midterm, I'm bullish as long as the market is trading above these highs, above these wave 4 lows, not highs. And on the daily chart, we can see here that I'm talking about this pullback as a wave 2, which is still only second leg of this wave 5. So I'm bullish on stock market, but again, I need a confirming price action that will confirm my bias. So here, yes, we have a 3-wave decline with a triangle in the middle. That's very nice, because we know that even if you label this as a wave 2, then you know that the triangle cannot be placed in wave 2 position. Okay, so I think that's a wave B, and that this is wave C, and that we could see a test of this 38.2% retracement compared to this wave 1 distance, but from here I need an impulsive rally back through this key level. Okay, or maybe this even will be enough, because then we would have an overlap with this wave B. So if we get above this level in impulsive fashion, then this will be a very strong indication that wave 2 has bottomed, or maybe even any other corrective leg. That's not important, because then we will look for a push higher back towards these all-time highs. Okay, so wait for this impulsive price action for possible bullish continuation. Now here on daily chart, I'm also seeing that price is testing now 50 period moving average. That's very nice, and could see a bounce from here. Also, you can see here that previous resistance was broken here, could now become a support here. I can see the RSI trading well below 50, but a nice reversal back above 50, something similar like here, could cause a new bullish trend for the S&P 500. Okay, so that's what I will be watching very closely in the next week. Okay, traders, that's it for now, and I will catch you with new updates on the daily charts during the weekend, most likely on Sunday, and with further updates on 4-hour and intraday charts on Monday. Have a good weekend. Bye.